What's going on, you guys? This is Aaron from Departures Capital and welcome to the video. As you can see, guys, this is going to be a late night video, and I gotta say, before we dive into this, I just spent the last 4 hours putting together all this data for you guys. So this is a new style of video. I went way more in depth when it comes to the financials, and I'm super excited to share it with you guys. So stick with me. There's a lot of terms, there's a lot of things that I'm explaining in this video. It's not like my normal videos, as we're trying to educate and understand mining on a much deeper level. So I hope you appreciate the info in this video. If you do, of course, I would greatly appreciate if you smash that like button. And of course, if you do like constant daily coverage on the markets, new stocks, new companies, and always doing more research and trying to improve our due diligence, then please smash that subscribe button and the bell for notifications. And I promise to deliver the highest quality of content and improving quality of content in the videos to come. So thank you so much, guys, for supporting the channel as of now, and let's dive straight into this video. So of course, this is your top 3 silver mining stocks for 2020, or whatever you want to call it. But we're going to talk about first the price forecast for silver, why I like the metal, and then the 3 companies. And we're going to go super in depth. We're going to talk about the reserves, their production capacity, how much it costs them to mine. I put together a really thorough video for you guys, so let's dive into it. The first thing I want to talk about was, in fact, the silver price forecast for 2020 and in 2021. And what it's looking like, guys, is silver is going to have, it's starting to lift off in 2020, but we're going to see those real gains in 2021. And I want to share this study with you guys. So first, let's take a look at this. This is a silver price forecast study, whatever you want to call it. But there's something really interesting. It's called a COT, which is a commitment of traders. So let's read what is a COT. So the Commitment of Traders Report is a weekly publication that shows the aggregate holdings of different participants in the US futures market. So basically, it's the traders saying, what they're long on, and it's pretty much a report. So measuring the Commitment of Traders Report, every time non-commercials are in the 60 to 80,000 contract net long, it tends to signal a major peak in silver. So referring to the charts here, guys, we can see that as silver peaked, it started to decline. Those COTs also started to decline. Now, where are we today? We're currently at 60,000 non-commercial and 80,000 commercial net long positions. So now is going to be a test in terms of the price of silver to see where it goes. When it comes to the extreme low level of net long contracts by non-commercials, we see 2 potential scenarios. Either their positions drop close to zero. This comes with a serious price drop. It tends to happen in a silver bear market. So we can see when silver did go into a bear market, those net long positions did dramatically decrease. Number 2, either their positions drop but remain significantly positive as the price correction ends. This tends to happen in a silver bull market. So here's where it gets important. After silver's major peak in 2011, we saw many drops of silver's price close to zero for both non-commercial and commercial traders. The ultimate test for 2020 and 2021 will now come soon, and we expect silver's price correction to come with a significantly higher number of contracts for traders. So basically what this means is they're expecting the contracts to stay high, yet the price of silver to potentially correct. Now, this report was put out a couple months ago. Also, going to the longer term charts, I just want to read this one important point. Consequently, we expect silver to take another 8 years to peak again at $50, where it will see a triple top. This will clear the way to move higher. That's certainly not for 2020 and 2021. No matter if some analysts tend to be overly bullish, it ain't going to happen that fast. So once again, just an opinion, but it's nice to know that a longer bull market could potentially be in store for silver, which is why, investing now into some of these companies, even if the forecast is the 20s or the 30s for silver in the next couple of years, it's nice to see the fundamentals going forward for a much longer bull run. When I'm making these investments into these companies, I'm looking to invest for the next 5 to 10 years. That's pretty much my timeline and my horizon. So let's take a look and see what all the other analysts are saying. And there's some wild numbers here, guys. Let's talk about the big banks. All right, so Investing Haven's research team, they see silver price forecast for 2020. Bullish basis spiked to $24. 2021 spiked to $28. Keith Neumeier, CEO of First Majestic Silver, which we will be interviewing and have already interviewed on the channel before, $130. Colin Hamilton, BMO, $18.60, RBC $17, Degussa $23 for 2020. And we've got pretty much mixed forecasts, anywhere from 18 to the mid to high 20s, other than of course Keith Neumeier, who thinks triple digit silver is going to happen. So fingers crossed. I really hope that does happen. So Let's get into the companies now, guys. And the first company, of course, it's our favorite company, Fortuna Silver Mines. It's the smallest one out of the bunch. We're going to sum it up pretty quick. Got a $961 million market cap, which has moved up pretty fast. Almost at $1 billion, 52-week range of $2.05 to $6.22. And I will say this was probably one of my best buys as the market was crashing. Did manage to get in March 16th. I remember the day at $2 and I believe it was 11 cents. So far doing pretty good on that small position, but I do have stocks from, I've been buying this thing for a long time. So I've bought in the 6s and the 5s and the 4s. So combined, I don't know exactly what my average is because it's in probably every one of my accounts, but I was happy with the March purchase. We'll just say that. Let's get into the details for Fortuna Silver Mines. So it's the smallest cap one of the three we've selected. It's got mines in Mexico, Argentina, and Peru. We're also going to be talking about their corporate profile. So Fortuna is a rapidly growing precious metal producer with 2 low-cost mines in Peru and Mexico, holding commanding land positions in Peru, Mexico, and Argentina. We'll go through all of their production highlights. I've got all that information for you guys, along with, the cash on their balance sheet, financial stability, and all of that good stuff. So we'll get into the analysis in just 2 seconds, but that's just an overview of the company. The second company, Pan American Silver, currently trading for $37 per share. This is the biggest one at a $7.92 billion market cap with a 52-week range of $13.85 to $38.91. So this stock is flying. It's needless to say, these stocks are very close to their 52-week highs. So the silver stocks have been on a run. What I want to see is long-term fundamentals for the industry. So, I think that that's now there, at least for the price of silver. So let's get into the details for Pan American Silver. Once again, just an overview. Then we'll go over all the numbers in this nifty little spreadsheet. The world's premier silver mining company. Pan Am Silver is the world's premier silver mining company with large silver reserves and diversified portfolio of producing mines. And that they definitely do have. So operations, 25 million ounces of silver, 557.2 million ounces of silver reserves, cash cost per ounce of silver, $6.39. But we'll get into the all-in sustaining costs. I just want to talk about their diversified portfolio and where is the silver and gold actually coming from, because most of these companies do in fact produce gold as well. 31% from Mexico, 43% from Peru, which I thought was pretty significant because most of these silver miners produce the majority of their silver from Mexico. 6% Bolivia, 5% Argentina, and 15% Canada. So they've got all their mines listed on their website. You can check those out, but I've put together the most important things later on in this video. The third company, First Majestic Silver, which we just talked about Keith Neumeyer. He's a CEO. He's a long-term industry veteran, and I'm super excited to interview him and talk to him about silver and his triple-digit price prediction. But for this video, we're using First Majestic Silver as our third pick, $2.82 billion market cap, 52-week range of $5.30 to $16.50, and the stock hasn't hit 52-week highs just yet, but we'll get into all that stuff now. I just want to go quickly over the overview. So one thing I like about silver, and I like how they do this investor presentation, is they talk about the need for silver, the fact that silver is going to be in electric vehicles, electronics. Silver is pretty much in everything, so it's going to be a massive component of electric vehicles going forward. Silver is actually in a shortage, believe it or not, guys. So another thing I love about silver is the gold and silver ratio, and this is also in First Majestic's investor presentation. The gold and silver ratio hit an all-time high on March 18th at 124 to 1, which means it takes 124 ounces of silver to buy 1 ounce of gold. So I think that's dramatically going to contract, therefore supporting the price of silver. Let's see what First Majestic's all about. So primary silver producer, 60% of revenue from silver. World's largest silver producing company, 3 producing silver mines, 4,700 employees, over 350,000 hectares of mining claims in 8 states, become the world's largest primary silver producer. So it's also interesting to know that management owns 2% of the company, with the CEO owning 3.6 million shares. So he's heavily invested into this company with a pretty balanced retail and institutional investor base of 44% each respectively. So they're heavy in Mexico, guys. That's pretty much their main focus. They've got their 3 producing mines in Mexico, 1 suspended mine, and 5 projects on the go, also all in Mexico. As we know, Mexico is the world's #1 spot to pretty much mine silver. So guys, now I want to get into the spreadsheet. That's pretty much the overview of the 3 companies, but this is where I think it's really important, because we're comparing the financials, the production, their reserves, and then we're going to kind of give our opinion as to which one is the best, which one's the riskiest. So first we're going to talk about the current ratio. Essentially the current ratio is just their current assets over their current liabilities, and it determines how financially stable the company is or how easily they could pay their debts if they had to. If the company ran into problems or if the sector tanked, how financially stable are they? So in terms of Fortuna Silver Mines, it's got the lowest current ratio. So the higher the current ratio, the better. So Fortuna has less assets and a little bit more liabilities than First Majestic, which give Fortuna a 1.7 rating. Now, First Majestic has the best current ratio, 242 million in assets and just 71 million in current liabilities. Pan Am Silver is right there in the middle at 2.9 with 788 million worth of assets and 271 million worth of current liabilities. So now we're going to get into the price to book ratio. So the lower the price to book ratio, the better. So Fortuna has the lowest at just 1.5 times. First Majestic's the most expensive at 4.2, and Pan Am's right there in the middle. So in terms of stockholder equity, I wanted to point out that Fortuna has an under $1 billion market cap with 635 million worth of stockholder equity. Meanwhile, First Majestic has almost 3 times the market cap with just 662 million in stockholder equity. So when it comes to these two, Fortuna clearly has more stockholder equity based on market cap. But then when we compare Pan Am Silver, this has an almost 8 times bigger market cap with 2.4 billion in stockholder equity. So if we compare that to Fortuna, I think Fortuna is the clear winner here when it comes to stockholder equity. We all know what 635 million times 8 would be. It'd be over $4 billion. So in terms of market cap versus stockholder equity, Fortuna Silver Mines probably the clear winner here. Now, zero goodwill for 2 of these companies and 3 million for Pan Am Silver doesn't really mean much. Total cash, Fortuna has 83 million, First Majestic has 175 million, and Pan Am has 238 million. So once again, for the size of Fortuna, having 83 million in cash is pretty impressive. Now, let's talk about income and cash flow. So net income of 23 million for Fortuna. Meanwhile, First Majestic had a loss of 40 million, and Pan Am Silver had a net income of 110 million. And I really did some research, guys, and this loss for First Majestic was due to one of their mines taking an impairment charge of over 50 million. They would have had 10 million worth of net income, but their San Dimas mine, I believe, you can look it up in their most recent quarter, did take an impairment charge. Free cash flow for Fortuna of negative 161 million, 21 million in free cash flow for First Majestic, and 74 million in free cash flow from Pan Am Silver. So Pan Am Silver is a clear winner in terms of free cash flow. All right, guys, diving into the AISC. The AISC is very important because it tells us how much does it cost these companies to produce the silver, and then what kind of margins can they be looking to make when they sell it. So the lowest producer is Pan Am Silver, followed by Fortuna, and then First Majestic at $12.64 per ounce for silver. I couldn't find the AISC for gold, which was very, very frustrating, but Pan Am Silver did state that at $948 per ounce. But once again, these companies are more focused on silver, so maybe that's the reason why. Now let's take a look at their mineral reserves, and I think this is very important for the future, just to get an idea of how long these mines are going to have, how long is the company going to be able to go before they need to start exploring again or acquiring more projects. So guys, in terms of the mineral reserves, this is what puts First Majestic and Pan Am Silver apart from Fortuna, and this is where the valuations, I think, really come into perspective, because it's clear that First Majestic and especially Pan Am Silver, they just have so many more mineral reserves. So let's take a look first at what the difference between the 3 are. So there's 3 different types of mineral reserves, and I want to explain those to you guys quickly, as easily as possible. So we've got measured and indicated, proven and probable, and inferred. So I actually took the definitions from online and I put it into a quick little document, and we're going to read this together. So here's the thing with mineral reserves, guys. There's going to be portions of that they're not really going to be able to mine, yet they know that it's there. And then there's going to be parts that they know the quality, they're going to be able to mine it. So that's where the difference comes in. So we're going to take a look at what is a proven mineral reserve. A proven mineral reserve refers to the economically mineable part of a measured mineral resource demonstrated by at least a preliminary feasibility study. Now we've got probable. Refers to the economically mineable part of an indicated, and in some circumstances, measured mineral resource demonstrated by at least a preliminary feasibility study. So I know this is kind of confusing. Now we've got measured and indicated refers to a part of a mineral resource for which quantity, grade, or quality, density, shape, and physical characteristics are so well established that they can be estimated with confidence sufficient to allow the appropriate application of technical and economic parameters to support production planning and evaluation of economic viability of the deposits. So this is a very accurate study. So this is a measured mineral resource. Indicated mineral resource, parts for which quality, grade, or quantity, density, shape, and physical characteristics can be estimated with a level of confidence sufficient to allow the appropriate application for technical economic parameters. So these are very accurate measurements. Then we have inferred. What does inferred mean? Inferred refers to that part of a mineral resource for which quantity and grade or quality can be established on the basis of geological evidence and limited sampling and reasonably assumed but not verified geological and grade continuity. The estimate is based on limited information and sampling gathered through appropriate techniques from locations such as outcrops. We caught the fireworks in the background, guys. Wow. We're shooting this video at an awesome time. So going back to mineral reserves, guys, and here's where, I think paying a little bit more for maybe a company that has a lot more reserves might be in your best interest, especially in the long term. Because let's face it, guys, Fortuna is trading at an attractive valuation. My only concern with the company is that they will have to eventually either acquire more properties or do more exploration, just things like that. So that's why, looking forward into the future, the bigger guys tend to have more assets and more proven and probable, inferred and measured and indicated. So let's take a look at the numbers. So 9.9 million ounces of measured and indicated silver, 37 million ounces proven and probable, and 30.9 million ounces inferred. That's compared to, First Majestic with 143.6 million ounces measured and indicated, 85 million ounces proven and probable, and 126 million inferred. And then, of course, Pan Am Silver at the almost $8 billion market cap with 797 million ounces of measured and indicated, 557 million ounces proven and probable, and 302 million ounces inferred. We're not going to talk too much about gold, but just to throw it in there, a couple 100,000 ounces measured and indicated in terms of gold for Fortuna, 1,937 or 1.9 million ounces of gold, which I want to point out, that is another thing I want to talk about Fortuna, is they've almost shifted their focus and they have quite a high amount of gold reserves based on, their 50,000 ounces of production per year. So what that makes me believe is Fortuna actually is putting some focus on gold. I know they have their Lindero gold project. They're only producing 50,000 ounces of gold right now, but I will be doing some more research on this company, but it looks to me like Fortuna is almost diversifying their income streams, putting some emphasis on gold. So I did notice, like I said, a 1.9 million proven and probable ounce of gold. They've got more than double the proven and probable amount of gold that First Majestic does. And then, of course, Pan Am Silver has 5.1 million proven and probable ounces of gold. So let's talk about production now. And that'll be it for the video. I'll give you guys, my opinion on the three. So in terms of production, so for Fortuna, we have 50,000 ounces of gold. For First Majestic, 134,000 ounces. And for Pan Am Silver, 559,000 ounces of gold production. Now, when it comes to silver production, this is where it gets pretty interesting. So Fortuna's producing 8.8 million ounces per year. First Majestic's producing 25.5, and Pan Am Silver is producing 25.8. So First Majestic and Pan Am, in terms of production, they're right on par. Where Pan Am kind of has the advantage is definitely in the reserves. But then when we compare, the price to book ratio, it's clear that investors are willing to pay more for First Majestic. Now, I don't know exactly why. The only thing I can think of is the fact that, Keith Neumeyer is the CEO, and he's an industry veteran, and he's a big name in the sector. So I do understand and agree with paying more for good management. I haven't looked into Pan Am Silver's management or Fortuna's as much, but that's the one thing I can point out and think of when it comes to, their price to book ratio. When it comes to stockholder equity, it's pretty clear that, Pan Am Silver and Fortuna Silver Mines definitely have more stockholder equity. It's a tough call, to be honest, guys. Which one is my favorite? If you want that unknown, that small cap growth potential, then of course, buying into Fortuna, the valuation's way more attractive, but there's way more uncertainties when it comes to the future. They don't have as many mineral reserves. Their production isn't as high. They're kind of transitioning to gold by the looks of it, or not so much a pure play silver miner. anymore. Those are things to take into consideration when you're investing in First Majestic. You're pretty much investing in a company whose CEO is the most diehard silver bull that there is. He has a $130 price target on silver. So if you want, a dedicated industry veteran who loves silver, then First Majestic, in my opinion, that's where that company is going to go. They're laser focused on silver. Pan Am Silver, clearly bigger than First Majestic in terms of their mineral reserves. Production's on par with the company, but I believe they're the most diversified, long-term, sustainable play when it comes to silver because they have the most amount of mines. They've got multiple projects under development, exploration projects. So that's my opinion on the three guys. I hope you enjoyed this video. If you made it to the end, drop me a comment. Let me know. This was the longest, most intricate video that I've ever made. I put the most amount of research into this ever. So like I said, if you did make it this far and you didn't like or subscribe, please like and subscribe. That's the only thing I ask. I'll continue to make videos like this. So that's it, guys. I'm out of here. I'm so beat for today, but DC will continue to make more videos, better videos, and that's it. So always remember, guys, Departures Capital is for information, education, and entertainment purposes only. Don't buy or sell stocks. You heard it on here. Buy or sell stocks because you've done your research, you've done your thorough due diligence, and make your own personal investment decisions for yourself. This video is not financial advice. We'll see you guys in our next video.